Good afternoon, everyone. I am Vaishnavi Vaiti from Kiran Advisors. Welcome to the virtual roadshow of Ambey Laboratories Limited. Today, we will provide a brief overview of Ambey Laboratories Limited and its innovative business model, along with insights into the agrochemical industry. Ambey Laboratories Limited is engaged in the business of manufacturing of agrochemical products, particularly herbicides of protecting of crops for the past 2 decades. The company is also backward integrated with one of its raw material, and that's the core competency and USP of the company. The company supplies to all major agrochemical companies that are listed in the market. They are the third largest manufacturer of 2,4-D chemical used for crops and one of the very few companies manufacturing this product in this scale. The company also exports its goods across Eastern Europe and Southeast Asia. From the management team, we have Mr. Archit Gupta, Chief Executive Officer of Ambey Laboratories Limited. Hello, sir. Good afternoon. Welcome.
Good afternoon. Well, thank you so much.
We have Mr. Shomi Khanna from Fast Track Fintech Private Limited. Good afternoon. Good afternoon, sir. Welcome.
Thank you, thank you.
We also have Ms. Sakshi Parnami from Fast Track Fintech Private Limited. Hello, ma'am. Good afternoon. Welcome.
Good afternoon. Hello.
Now I hand over to Archit sir to give us more insights about the company and its future plans. Over to you, sir. Thank you.
Yeah, thank you, Anjali. Um, I would like to first thank the panel and everybody who's joining. Um, I'm going to be presenting our case in front of everybody about the IPO that we are coming, and I really thank all of the people involved in it for making it possible. India has become a $1 trillion economy. Had become $1 trillion economy in 2007. It took 60 years for us to achieve this goal. And in next 20 years, we expect to grow to $5 trillion economy. At that time, nobody could actually believe that an additional 4 trillion can be added within 20 years. Now, what has changed? What are the intangibles? Why could nobody predict it? And the reason is that there were some intangibles that were not seen in 2007. And those intangibles were the time and technology. Because with time, what has happened is that time has become a sense for everybody. Earlier, everything was a little slower. Now, because of technology, the time has become fast. The time is very less. And technology has only enhanced that. Having looked at it, aspirations have increased. And with aspirations have come real good growth in mobiles and cars and clothes, but also food. With others, what has happened is that there is a man-made process. We have factories for that. There can be more factories for that. A lot of changes can be done in that. A lot of preparations can be done in that. But when it comes to land, where the food will grow, the land is an ever decreasing, shrinking product. And the food is needed more during this course of time. Now, how do we match that? So the technology of agrochemicals comes in here. And that is why agrochemicals, which is little thought a little not supposed to be used in the crop protection, but it is the most important product to actually protect your food security. And every government is working on it in order to make sure that the land area that they have, firstly, it should be fully utilized, and secondly, it should be able to give you the best result, maximum yield out of that. And agrochemical is primarily used to ensure those goals are achieved. I will give you a very small brief of agrochemicals, and then I'll tell you about my company. Agrochemicals is basically divided into three basic categories: herbicides to kill herbs, fungicides to kill fungus, and insecticides to kill insects. In this format, in this particular combination, a farmer uses all these combinations on every crop in different during different times and different products in order to secure the best possible yield out of the land that he or she has, and ensure that the next crop is also good. So these agrochemicals are used in this category. Now, herbicides earlier were used only 25% of the total capacity or total utilization of agrochemicals. and now it has gone up to more than 35%, and primarily because the manpower cost during this course of last 20 years has gone up. And earlier, farmers used to use their hands to pluck out the unwanted herbs that are not giving the exact results from the crop. But now, because of the manpower cost being going up, because of the youth that is coming in, because of the technology, because of time, herbicides have started to use more. And if you see that in the international economy, in the developed nations, in the other nations, herbicides has about 40% of the total consumption pattern from a farmer's agrochemicals requirement. We at Ambey Laboratories manufacture a product called 2,4-D, which constitutes 2,4-D is a herbicide, which constitutes more than 65% of our revenue. 2,4-D as a product is a herbicide, and that is used primarily in paddy, wheat, sugarcane, and tea gardens. We are the third largest manufacturer of that, not officially, but yes, we are third largest because there is no official data of it. It is a seven-stage process that we manufacture this product from very base chemical up till the last. And why we are saying that? Because we have backward integrated ourselves to the base chemical. That means our company uses only base chemicals from outside and then manufactures the best product of 2,4-D and sells the finished goods to customers. Now, who are our customers? Our customers are formulators. Those formulators, they buy from us, they repack it in their own brand into small and use their own networks, distribution network, manpower network, sales network to sell it to the farmers. So we basically are into a B2B segment. Our if you see our buyers, they are all listed companies primarily, and our major consumption comes from them. We are holding more than 250 to 290 customers at our database. Our 2% of our revenue goes into R&D, and primarily the R&D I want to share particularly is that the R&D is not for the product that we produce. The R&D is for the residue of that product on the crop, and we spend a lot of money on that in order to reduce those dioxins or those uh, unwanted chemicals from the crop, and that is the best possible R&D that is needed for the products that we are manufacturing. And we intend to increase it to 5%. We have already done research on our product in through Indian research foundations and through Brazilian research foundations, primarily because one of the biggest countries in the world to use those kind of agrochemicals. So it helps there. So we have used those research foundations to do those tests, and then we come back to our laboratories, we do those tests, and then we make our product even better and better and better. And it'll continue but we will continue to do better on this particular R&D sector, and we'll continue to spend almost 4 to 5% eventually, and those R&D will be used, those spends eventually will help us to register ourselves not only in the markets that we currently are exporting to, like Eastern Europe and a little bit of Africa and Southeast Asia, but also to developed nations like Australia, Brazil, Brazil being developing nation, and US. And that is what our next 2 years plan is. We have a manufacturing facility which is about 5 acres or 20,000 square meters in land, and almost 2.5 acres is available for our big expansion. We have got Ministry of Environmental clearances of more than 100 crores of capex, which took us almost 4 years. Now, going forward, this time and this money that we have already spent to get the clearance will help us to achieve our goals faster than before. And as I told you that the intangibles that are there, that is the time and technology, we're going to use that to the maximum because we also as a SME need to run very fast with the changing technology and changing demand basically. Even though the technology will not change in terms of the manufacturing process that we have or the consumption, but what happens is the need, the requirement, the time, the speed of supply, that is very important, particularly in agrochemicals. We are backward integrated in one of the raw materials of agrochemicals, as we have already shared. And the new products, that is the 35% products that we are manufacturing, the additional revenue that comes from the 35% products. What we are doing is that we have already identified two products which we will be backward integrating till December, and then we will be reaping benefits in FY 25-26 from that. That is our simple business model, and This is the reason that because the technology and time and the use of our resources, which we already have, we have come to the SME platform to raise funds. We had initially, we intend to use this fund primarily for the working capital because we have already bridge gapped our capex through NCDs, and we intend to start our production from the new capex from January 25, and then the expected results in the next 2 years coming. Thank you, Anjali. Over to you, please.
Thank you, Archit sir. Now we will play a short AV of the company and then we'll start with the presentation.
We are dedicated to nurturing growth with our top quality agrochemicals and intermediates. Trusted by farmers globally, our products ensure healthier crops and bountiful harvests. Ambey Laboratories, cultivating a greener tomorrow.
Thank you. Now we'll start with the presentation.
As you can see in the presentation, that we have got more than 200 employees. The products are mentioned there. We have got 200, more than 200 um, licenses also from for agrochemicals. Over to the next slide, please. These are the products that we manufacture. We have got two categories of our manufacturing process, two segments. One is the agrochemicals, and the other one is home hygiene products. Home hygiene basically is the home pesticides, I would say, so which constitutes almost 5 to 6% of our total revenue, and eventually going forward also it will remain in that level. So as we grow on to 200 to 500 crores of top line, automatically it will the home hygiene product will also go up to 5 to 10%. That will range between 5 to 10% of our total top line as well. Next, please. These are some of the pictures that we have of our factory. With, as I told you, it's a 7 stage process. So all possible chemical processes that can be there in a manufacturing facility, we already have that. Next slide, please. Before we go to the next slide, also we also have an R&D team of 13 people, which constitutes of one PhD and others are MScs and BScs. This is where we export. We intend to, we almost doing almost 8 to 9% of our total revenue comes from export. We intend to make it to almost 50% in the next 2 years, and primarily because of the research papers we've already shared with all the countries, and the time process to get the approvals from them would range from 6 months to 2 years. And then of course once we start doing exports from them, and we have already identified the customers, because this is how the process is, that you need to first identify the customer, then put your papers in the government, and then for them to check and then do the due diligence, and then allow us to export into their countries. Next slide, please. These are the management. Uh, I am the CEO. Arpit Gupta is the COO. Then we have directors, CFO, CS, and independent directors. Next slide, please. Well, I've already shared that we have our factory is in Rajasthan, so about 120 kilometers from Delhi on the national highway, and it is very well placed in terms of catering to the northern market and the southern market because of the highways and other things or other infrastructure that's already there in place, and that helps us to not only get the raw material in time, but also cater to the northern market, which is very big because of the sugarcane and paddy, fairly comfortably. Next slide, please. This is about As I already shared, that we have already backward integrated into in this in the raw material, and we the new products that we have launched already, out of the 4 to 5 new products that we already launched, two of them have been identified, and the capex is already in place, which is being done, and it will continue to be done till December, for the backward integration of that particular product. The new products, which are the new product, one of the new products, we are doing almost 15 to 20 crores of top line. The moment the backward integration will get um, completed, for that particular product, we'll be able to do almost 50 to 60 crores of top line in the coming 2 years. So that is not only going to add our top line, but also our bottom line for that particular product. So we are already in place. So two such products have already been identified. So for the next 2 years, we are fully piped up, and then we intend to go forward. The moment we spend another 6 months and 1 year within this company doing the same job, we will be able to identify 2 to 3 more products for the next few more years in the pipeline. So that is the ongoing process that we want to have. Next slide, please. Well, there are certain strengths, opportunities, but my primary objective would be to share our weakness, and the weakness would be that we are still not able to cater to the export market, which is a very long and lengthy process. Fortunately, we have already spent that kind of time uh, before we have come for the IPO. We have spent multiple years in just getting our product identified into the markets, into the international markets, and we intend to capitalize it now post our IPO in a big way and faster way. Um, well, there are since it's an agrochemical, uh, there are very the only thing that is there is that we use the chemicals which are little flammable, or the products are hazardous, and then even though that is there, but we are fully insured. Our team is fully equipped to handle such situations. Well, when it comes to opportunities, there is no questions about it that export is very, very big market, and then we have a huge opportunity in front of us because we have not tapped it to the best of the levels that we should have. And post IPO, we should be able to do that. And strengths, as I've already shared, that we are very well placed. We also have a very less debt. We are leveraged to zero point 0.6. I mean, our debt equity ratio is only zero point 0.6, and going forward, it'll even further go down to almost zero point 0.2, zero point 0.3. But during the course of next few years, we still have the opportunity to go up to. We have opportunity to get more debt into our system because our DSCRs are fairly large, 3.5 to 4. So we are still, because we are uh, very less leveraged. We have a huge potential to take debt also post the capital infusion from the IPO. Next slide, please. Key financials. Shamiji would, if Shamiji is fairly audible, then we can ask him to present it. Otherwise, I will be more than happy to do that. Shamiji,
Yes, sir.
if you could please
Hello.
present the financials quickly, please. Thank you.
Sure. Thank you. Uh, if you look at the revenue, the company has been steadily growing. And today, the revenue for this year, the financial year, was close to 100 crores in March. And if you look at the PAT as well as EBITDA, it is increasing steadily over the years. If you look at the EBITDA, it was around 10.8 crores in 22, and to 24 till January, it was 12.73. And the PAT margins and EBITDA margins have been increasing again. This is primarily because of one, increase in revenue. Second, profit margins have improved. Third, the main reason is that we have brought down the cost of funds, which was close to 20%. Today it is close to 10%. So this has again added a lot of profitability in the company, and we intend to decrease the cost of funds further. We hope it to go below take it to single digit, around 9% in the next couple of years. The third factor that is helping us is start of the export, and the profitability will increase further as we add on new products. If you look at the debt to equity ratio, again, the debt coverage ratio is very, very comfortable for the company at the moment because we are a low debt company. There has been slight increase in debt in the last year. That is primarily because of the issuance of NCD, which we did it to bridge gap our capex plan, so that with the IPO money we can kickstart the upsurge in revenue faster. And that's it on the financials.
Next slide, please. Shamiji, I think the key ratios
If
in
you look at the
yeah.
if you look at the ratios also, it is self-evident that we are becoming better. The financials are becoming much better over the years, as our current ratio has improved from 1.13 to 1.62 till January, and it has improved further in the March. And if you look at the turnover ratio, receivable turnover ratio, again you will find that there has been improvement. So if you look at all the parameters, we have been consistently improving in terms of financial health of the company. We also did was converted the unsecured loan from promoters into equity. That increased our equity capital also. That has also helped us in the ratios. Now this has an impact in terms of EPS, but this is a healthy sign because our profit margins have increased because the loan has been converted into equity. So although it looks expanded equity, but in reality it is much better. Next slide, please. This Sakshi, if you can throw some light on the issue structure. I think Sakshi is not there. Okay, so we are the fresh issue. The issue is consist of two parts. One is fresh issue of equity, and the second is offer for sale. Offer for sale is very small amount, which is 3,12,000 shares, equity shares, while the total issue size of fresh equity is 62 lakhs 58,000 shares. Out of this anchor bid, the anchor portion is 8 lakh 74,000 shares, and QIB shares are 12 lakh 48,000 shares, equity shares, and rest is NI and retail. Um, it's hard to predict, but we have till now received very enthusiastic response from anchor investors, and we are evaluating the same, which will the anchor book is opening tomorrow, and we are quite hopeful that we will be able to oversubscribe the same. The price per share, if you look at it, the price band is 65 to 68 rupees. 68 rupees is the upper band. At upper band, the total issue size will be close to 44.7 crores. That is the issue structure. And one important point to note is that in spite of the OFS and everything, the promoter holding post IPO will be close to 70%, which is a very healthy sign because the promoters see a lot of value in this company, and this can be vouched from the other facts also. Thank you.
Yeah, the objects of the issue is already there at the RHP. However, working capital, capex, working capital, and company requirements, general corporate purposes is what the object of the issue is. Next slide, please. Over to you, Anjali.
Thank you, sir. Now we will start with the Q&A session. I request all participants to post your questions in the comment box.
Anjali, any questions?
Yes, sir. So first question is from Arundhati Kapila. What are who are our competitors?
So since we're the third largest, our first two competitors are Atul Limited and Make Money Organics Limited. Both are listed companies from Gujarat.
Next question, please. Yash Mistry. Which countries do we supply currently? What are our plans for regional expansion?
We are currently supplying to Southeast Asia and Eastern Europe. We are doing merchant supplies of exports to uh, South America and south of that is Guatemala and other countries. This is our exports, and we intend to increase the exports to the multiple countries that I've already shared. That is Australia, Brazil, US. These are the primary and African markets. When it comes to domestic, since we are B2B, so what we have to do is we mostly sell to our B2B customer who is present nationally. So when he needs it for Kerala also, or Karnataka, or Madhya Pradesh, or Gujarat, or UP, or Punjab. So whenever it is needed in those cities, they ask us to send it to their manufacturing facilities, and from there they do it small packs. They convert it into their brands and then distribute it. So we are pan India present, but our distribution of business does not show that ways because we sell it to their manufacturing facilities as it is a B2B segment.
Okay, next question, please. Sadika Narang. The company is the third largest manufacturer of 2,4-D chemical. Who are the first two companies?
Yeah, as I've already shared, the first one is Megmani Organics Limited, and second one is Atul Limited. Both are the first and second. There is a slight competition between these two, but yeah, it is pretty much one and two.
Okay, next question. Siddharth Upadhyay. What is our core competency?
Our core competency is that firstly that we are uh, focused on one primary. I mean, the product that we are focused on is completely manufactured by us. That means from backward integrated, we are backward integrated to raw material from the base chemicals. And the base chemical where we buy is 1,000 crore company. So what happens is that we cannot go further until we become 1,000 2,000 crore company. But we cannot go further to manufacture the base chemicals. So that is our core competency. The second core competency I would say is that the supply, because in agrochemicals, when there is the need of material of ours, then it is like yesterday. So everybody wants material. All our customers want material like immediately at their factories. And that is where we come in, because that is how we plan with our customers. We plan well in advance. We have 1 year of contracts with them in terms of quantities, so that whenever they are asking us the material, we keep telling them, okay, this is the right time to put material in your factory. This is the right time to store this much of material. And that is what our core competency is, that we do not let our customer uh, we help our customer to sell more product in their market. That is our core competence, and we closely watch it.
And if I may ask, if I may add, Archiji, the other core
Ji.
competency is the competency in terms of R&D facility that we have, our team has, and the ability to manufacture such complex products like seven-stage project, which is not easy and not many companies in India have been able to do that.
Yes, very well taken, sir. Very.
Next question, please. Rajesh Bhatia, please explain about your backward and forward integration strategies. How will it help in business and profitability expansion?
So as I explained that 2,4-D being our 65% of our revenue, we are already backward integrated in that particular product. So we are manufacturing one of the raw materials that we used to buy earlier from multiple suppliers. So that is one core competency and one benefit. The new products that we have already entered into, that is Pritila, Metribuzin, Profenofos, and other products that we are already entered into, we have already identified two products for which capex is already being done, and that will get completed by December, and then that will help us to take that particular product not only from the top line point of view, it will increase the top line as well, but also the bottom line, primarily because we are backward integrated, and we are fully piped up. As I told, that for next 2 years, we our plans are totally choked in terms of what we have to do, and during these 2 years, the next two products will also be identified, for which the technology is already being tested at our pilot plant, at our own facility in by road, and it's an ongoing process.
Okay. Next question, please. Subodh Joshi, explain your focus on export market.
So as I told you that we currently are doing exports of 8 to 10%. We intend to take it up to almost 50%. And primary source would be that we have already spent a lot of money in R&D. Those R&D papers have already been submitted to countries in US, Brazil, Australia, and other markets in Africa. And this particular, this effort has we have already spent a lot of money on that, and this effort has already been, we've spent money and time on it. And we intend to reap benefits within next 6 months to 2 years, that we expect almost 90% of the licenses from the countries that I've already shared with you to come to us. Almost 90%. I'm just giving that 10% as a chance of chance. That's it.
Next question, please. Research is, what is sustainable overall EBITDA margin going forward?
Can you please repeat the question?
What is sustainable overall EBITDA margin going forward?
Uh, do they want a percentage?
Yes, sir.
Oh, so basically, we are
So,
currently doing about 30% of EBITDA. Yeah, please, Ambey.
yeah. So the EBITDA margins are sustainable from the very fact that we have been we have been expanding our product portfolio continuously, and the second reason is we are doing a backward integration that will help us increase the margins. Third, the not the EBITDA but the profitable margin will increase because our cost of funds will go down, and it is very much sustainable because one of the products for which we have recently we are doing the field testing, the government has imposed the anti-dumping duty, because of which our revenue and sales will revenue as well as the profitability will increase.
Okay. Next question, please. Divya Patel, explain your domestic and export contribution for financial year 24.
So exports is almost 10%, and 8%, I would say. And indirect exports is also there, so that's why I'm saying 10%. And the remaining is domestic. And we intend to take it to almost 40 to 50% balanced in domestic and exports in the coming future.
Okay. Next question. Ajay Gupta, what are vertical wise margin?
Vertical wise, I'm sorry, I'm not able to understand this question.
Shami sir, can you answer this question or else we can take the next question? Next question, please. Jatin Mehta, till Jan 2024, we have seen sustainable revenue contribution from Delhi. Explain our initiatives and what is future growth region.
So the region, as I told you, that our customer base is already there. We only need to increase our capacities and put it across to them, and they're ready to buy. So, and the regions, as I told you, does not define my actual region, primarily because they are placed in a particular place. Like maybe somebody is in Rajasthan, somebody is in Haryana or Delhi or Hyderabad or Gujarat. But these are their manufacturing facilities or their corporate offices where we have to bill. So that does not define our utilization or uh, our expanse in terms of India network. So that will be very difficult to explain. Um, what was the second question of his?
Explain our initiatives and what is future growth region.
So future growth, of course, is there because our initiatives are that we actually go ahead and participate in all fairs, all exhibitions, and then keep ourselves updated with the latest technology. And that is what our plan is, and we continue to do that. That is because since we are B2B, so our marketing is only about our customers telling and buying more from us and adding more customers. We already have so many customers that we first need to cater to them completely and then move forward to others.
Okay. Next question, please. Rajesh Bhatia, Who are our marquee clients? How much business we receive from top 10 customers?
Our top 10 customers contribute to almost 80% of our business, and our top clients are listed companies. It's Dhanuk Agritech, Insecticides India, Safex Chemicals, um, uh, to name a few. Rest I would like to keep it to ourselves for the moment.
Okay. Next question, please. Ananya Swaminathan. What is vertical wise contribution to revenues and profit for financial year 24, agrochemical and home hygiene?
Oh, so agrochemicals, we are doing almost 95% and 5% of home hygiene, 5 to 6%. As I told you earlier also that we intend to, as in when we grow to 200, 500 crores of top line in agrochemicals, the home hygiene also will grow to almost 40, 50, 20 to 40, 20 to 50 crores, based on almost 5 to 10% of the total revenue. That's how it is poised for the moment.
Okay. Next question, please. Connection network. Can you help me with the overall our working capital cycle and what is inventory and receivable days in particular?
We have an inventory cycle of almost 70 days, primarily because the manufacturing process is a seven-stage process, which takes 21 to 26 days average to manufacture the product in the working cycle. We also keep a lot of raw material, but finished goods are not very high, primarily because we are already booked for the next 2 months. And the more and more the moment material comes out of the factory, barring few days, we send it to our customer. So our working capital is primarily into raw material and work in progress, and it ranges from about uh, uh, total range is about 70 days. And the second question was, ma'am?
What is inventory and receivable days in particular?
Yeah, so inventory I've already shared, and the receivable days are all averaging is about 60 right now, because there are a lot of customers we sell out of the 290 customers, barring few, we sell we sell on advance payment or immediate payment basis. So our average, our customer base is from 0 date to almost 90 to 120 days, and average is about 60 to 70 days.
Okay. Next question, please. Siddharth Ayer. What is the business risk you foresee for next 3 to 5 years?
Business risk, primarily none for the moment. As I explained in threats also, that since we are already using hazardous chemicals, there's always a risk. However, we are insured. So that is the only risk that we have, uh, to manufacture the product. In terms of sales, I don't see any risk, primarily because there is a huge entry barrier into it. And one more thing I want to share is that the product that we manufacture, somebody else wants to manufacture and sell to our customers, it becomes very difficult because the customer that we are selling to, he is going to sell it in his own brand. So until unless he is very secured or sure of the product that he's getting from a new customer is completely okay for to be used in his own crops, he will not buy. So it takes about 5 to 6 years or maybe more for any company like us to ensure that our product is being sold to these large corporates and they are using our product and selling in their crop fields. So it is a very, very big entry barrier, as I see. So uh, that is one. The business risk primarily is fairly low.
Okay. Next question, please. Chaitanya Deshpande. There is public holding of 5% in the company, whom the company have issued shares and at what price?
Shamiji, can you please take up, or Sakshi?
Sorry, we don't have Shami sir and Sakshi here.
Oh, hello.
Shami
Um,
sir.
we have got 5%. That will eventually be 3.3% shareholding. That was a pre-IPO round raised by our merchant banker to give confidence to the SME IPO.
Okay. Next question, please. Jatin Mehta. Your exports to Thailand is almost double in 10M financial year 24. Any specific reason?
Yeah, Thailand is a big market. We cater to that particular market primarily because of rice. Thailand is, as you know, the Thailand is one of the biggest producers of rice, paddy, and we have a very big base there. And the reason for the double growth is that uh, because of sometimes better stock levels that needs to be maintained at that. Because, for example, this is the right time to sow or use our product. So sometimes what happens is the companies want to stock more because the availability of a product becomes very less during the main season. So that is why the sales goes up and down depending on their requirement at that particular stage or at that particular time. So otherwise, we have very steady sales there.
Okay. Next question. Ishita Ahuja. What is our average realization per kg per ton?
I would not be having an average because have multiple products. I would not, and that will not justify also. But I'll not be able to give you an average for that
Okay, sir.
because
No
our
problem.
product ranges from almost 150 to almost 600 or 2,800 rupees product. So very difficult to give you an average for that, and that will not justify any um, average.
Okay.
So
Okay,
yeah.
sir. Next question. Uh, Anurag Shah. With IPO funding, what business growth we can expect for next 3 years? Would the company require further capital for business growth?
See, capital would not be required, but I think we have got a fair bit of we are since we are low leveraged, so we have got a ample space to leverage ourselves first before we tap the capital market. However, it is the board's decision when and where to tap, or if we have any opportunity that arises in front of us, then we would be more than happy to come to the capital market. But as of now, the plans are that we use these funds uh, to spur the growth of the capex that is being done through the NCDs that we had raised in the last 6 months, and we continue to follow that path until some good opportunity comes our way.
Okay. Next question, please. Jatin Mehta. What is your dealer's network?
Dealers network. Hello,
Yes, sir. He is
can you
asking
please
what
repeat
is
the
your dealer's network?
So we are B2B. When it comes to 95% of our sales is B2B agrochemicals to agrochemical companies. So that is our network. B2B doesn't have any distributors or something like that. However, for home hygiene products, we have more than 250 distributors across India for the moment. We intend to take it to about 450. And we currently cater to 29,000 retailers. That will continue to grow. We intend to grow it to almost 45,000 to 50,000 by the year end. So yeah, that is what the dealer network is for the home hygiene and this agrochem.
Okay. Next question. Sadika Naram. What is current capacity of agrochemicals and home hygiene products and capacity utilization?
So the capex is being done. So that capex is going to add another current capacity utilization would be about 65%. And this year we will be utilizing it to almost 80-85%. And the moment we do that, behind us is already another capex coming up. So that capex is going to help us for the next year as well. So that is how we intend to do it. We continue to do the capex so that the next years and the next to next years are all well placed, and there are no bottlenecks in the growth.
Okay, sir. Next question. Rahul Jain. The detailed company overview was commendable. Thank you and all the best for the IPO.
Thank you so much.
Ananya Swaminathan, thank you for the prompt response. Siddharth
Thank you.
Upadhyay, thank you and all the very best.
Thank you.
I think we have covered majority of questions. Thank you everyone. Thank you Archit sir and all the best for the IPO.
Thank you, Anjali. Thank you so much.